Welcome everyone to the Association of Lifelong Learners. Today we're going to be learning about stuff costs money and 7 credit tips everyone should know. And this is intergenerational. We have Alison Jakubcin with us. She's been employed by the Alpena, Alcona area credit union for 10 years. She's the marketing specialist and Wildcat branch supervisor for the credit union. Alison currently attends Alpena Community College and Northwoods University to complete her bachelor's degree in business administration with a minor in marketing. Alison was honored at the Alpena Chamber of Commerce Young Professionals and designated a Michigan Hero as part of Michigan Community Service Commission. Alison serves on the Friends Together Fundraising Committee, Hospice of Michigan, Alpena Fundraising Committee, and Secretary of the United Way of Northeast Michigan Board of Directors. She will be covering how you and the young people in your life will build great credit. Alison has a passion for financial education and is helping ensure that our area youth are financially literate as they enter adulthood. This program will empower you personally and help you speak with youth in your life about great ways to improve credit ratings, what impacts your credit, and how you can start establishing credit. Alison.
So I broke this down into 7 tips that everyone should know. So the first tip about making sure you have good credit is making your payments on time. Payments on time accounts for the biggest chunk of what calculates your credit score. It actually is 35% of your overall score is making your payments on time. It's also the biggest factor that can make you have your score go down. So if you are 30 plus days late, you're going to get a negative impact on your score, causing it to drop a couple points. And if you're familiar with credit scores, they will drop real easily, but it takes a long time for them to build back up. Tip number 2 is credit card utilization. So there is a fine line of how much credit you should have utilized out there. Anything 50% or above is going to negatively impact your credit score. So if you have $1,000 credit line and you have $550 charge, it's going to negatively impact your credit score. The good area is to stay under 30% credit card utilization. That won't negatively impact your score. But the top credit scores out there have less than 7% utilization out there. So that's a good thing to keep in mind. That's the number 2 biggest impact on your credit score also. It takes up 30% of your overall score is how much credit you are utilizing at one time. Tip number 3 is a really important one that I try and talk to as many people who have credit about, and that is reviewing your credit report frequently. If you visit annualcreditreport.com, they provide you with a free credit report from each of the 3 major credit bureaus. And what I suggest is, since each of them will provide you one for free, every 4 months you go in and visit and have one of the different credit bureaus pull your credit. It is a soft pull, so it will not impact your score. What that means is when you pull credit on like applying for a loan or a credit card, they'll pull credit and it can cause your score to go down. But this is a soft pull, so it won't impact your score. And it's always good to look at your credit report, see if anything that you don't recognize is on there. And if anything is reporting incorrectly, that's how a lot of people actually find fraud. Because a lot of times people will be out using credit cards and unfortunately performing fraud on people's credit, and they don't know until they see their credit report pulled, which generally they pull when they're applying for a loan. And you don't want to wait until you're trying to get a loan to see that you have fraud on your card. So I suggest visiting annualcreditreport.com and utilizing those free polls from the credit bureaus. That's one of my biggest tips I like to tell people about. It's a great way to make sure your credit is how you want it to be. You can look at all the lines of credit that you have, your score, any negative impact or any negative remarks you might have, or things like that. So it's a really great, useful tip that we at the credit union try and educate as many people about. That's a resource out there. My fourth tip is don't close out your oldest line of credit. A lot of times people will open credit cards when they're 18 to start establishing credit. And then 10 years down the line, they no longer use that card and they're like, oh, I'll close it. That actually can hinder or hurt your credit score. Credit, when people try and pull credit and when you apply for a loan, we look at your credit history, and that's also part of the makeup of your score. So if we see that you've had established credit with one company for 20 years, and then your next established credit is only a year with another company, and you close out that 20-year one, we're only going to see that you've had credit for 1 year, not over the course of 20 years. So we always suggest that if you're going to close out cards that you no longer use, close out ones that you've had less. Always keep your longest running credit card or revolving line of credit open, and just charge some gas every once in a while and then pay it off. It just keeps that revolving line of credit open and keeps a good chunk of what makes up your score in the positive. Tip number 5 that I have is having a mix of credit. So there are 2 main types of credit, and that is revolving, which is credit cards, and then there is installment, which is like a mortgage or an auto loan. A lot of times younger people mainly will have just credit card or the revolving credit, and they want to boost their score. So we encourage them to take out a small personal loan so they have that installment, and it actually will help boost their score faster because they have a mix. We always suggest the perfect mix of credit is credit card, mortgage, and auto loan. It's the triangle of mix of credit, and that helps your score kind of boost it as long as you're making those payments on time, and then it'll help you. My 6th tip is or a little bit of tidbit that I like to share is that a lot of people don't know that your credit affects a lot more than just your ability to borrow and lend money or loan money. It can impact insurance, car insurance. If you have poor credit, insurance companies can deny you car insurance. If you want to move and put utilities in your name, utility companies can deny you power, water, things like that based on if you have poor credit. Another thing that a lot of younger people don't think about is that if they want to go and get a cell phone plan on their own, and if they have poor credit, Verizon, AT&T, T-Mobile, all those phone companies out there can deny them a phone plan while they don't pull your credit necessarily. Like utility companies don't pull credit. They can deny you based on poor credit. Another thing that is that we talk about with how it impacts is potential jobs. At the credit union, we pull your credit as part of the job application process. And we like to hire employees that have good credit. So if they're going to talk to our members about credit, we want them to have some knowledge base. So it could affect your employment. And then the other thing is relationships you have with people. We're finding that a lot of spouses or significant others are having these conversations, and sometimes if one has poor credit and the other one has has good credit, they will hold off on getting married or actually end relationships altogether because the credit is so important to said party. So it's not just your ability to borrow or lend or to borrow money. It impacts all aspects of your life. And then my 7th tip is I am just going to give a breakdown of the score and how it's calculated. I know I mentioned a little bit before how payment history is the biggest aspect. So there are 5 components that make up your credit score. And the first one being your payment history. It accounts for 35% of your overall score. Late payments are a big factor that bring your score down. And then making payments on time continuously will help build that score back up if you're looking to raise your score. So it's the number one thing we tell people. Even if you can only make the minimum payment, just make your payment on time. If you can make more, that's always great, but at least just make that minimum payment on time, and that'll help your score. The second component of your credit is the amount owed. So like I said, 30% utilization is the ideal. To stay less than that, it'll help your score. 50% is always the, if you can't stay below 30, always try and stay below 50%, so it doesn't negatively impact your score. The next percentage is the length of history, which I kind of mentioned. It makes up 15% of your score. Longer history established will actually lead to companies lending to you more frequently than not if you don't have a long history of established credit. The next is 10% made up of your score is new credit. So opening several accounts in a short amount of time can negatively impact your score. We talk to students or our members about how you need to establish credit, and we suggest always that they use Alpena, Alcona Area Credit Union to open their credit, but sometimes they will open a store card like Meyer or Maurice's, and they'll open multiple in a short amount of time thinking that, oh, I'll have lots of lines of credit and that'll help my score, when in actuality it kind of negatively impacts them. We always say try and wait at least 6 months in between each opening of credit, so it doesn't really affect your score too bad, but that makes up 10%. And then the last 10% is the types of credit that you have, which is like an auto loan, a mortgage, and a credit card. That makes up 10%. So that is your score breakdown of how your credit is impacted. Does anyone have any questions?
When you have established credit and you're looking at new loans or jobs, you need to give permission to folks to look at your credit score?
So yes, they'll more than likely have you sign some type of document stating that we are going to pull your credit. If they pull your credit without authorization, they can get in trouble for that. So yes, you will be made aware that they're pulling credit. So it's not just, oh, I didn't authorize that. That's another good reason why you should visit the annualcreditreport.com. So if someone did try and pull some type of credit, you are aware that it has happened. And within that website, they offer you ways to help dispute if you do find things. So it's a great resource, and it is secure to visit this site. We recommend it to we recommend it to our members just to kind of stay on track of their credit. Yes.
If a person has bad credit,
Mm-hmm. I'm sorry.
If you don't go off the bank, your bank, then you can get a credit card. Let's see what it is. And you use it.
Yes, so we do offer at the credit union, we offer a product. It's called a secured visa. And so what we do is if you want to help bring up your score, what we're going to do is say we want to open you a $200 limit. We're going to make you secure $200 in your account for, I think it's a year. I'd have to double check on that. And then we'd give you that credit and you could charge it just like a normal one. And then afterwards, we would release those funds back to you. That just lets us know that you are doing what you said and you're going to make your payments on time. It helps establish with us the relationship that you are being responsible with your credit. So we do have those options available. Another tool that we are really proud of and we offer a financial wellness program to help members who might not have great credit build their credit up. I am a financial wellness counselor at the credit union. And so I meet with people and we go over their credit score and we look at how we can help save you money to pay down debt, ways you can cut things out of your life, certain expenses, like say you have 6 different streaming, Hulu, Netflix, HBO subscriptions, and you don't need to use all of them. We'll work with you to get those cut essentially and help you save that money that you're spending on them that you can allocate to paying down debt to help raise your score. And that's a free service that we offer to not just our members, but potential members as well. We are very passionate about ensuring our community is financially sound. And so we offer that program to people. And that would be something we would discuss with members in that program. Yeah.
If you have any speak, let's say with the right.
Yeah. Yeah.
You have probably got to do the right deal, right?
Yeah. So it's going to show up on our end as a collection. And in that instance, what I would do is I would have more than likely Verizon's going to turn it over to another company and that company is going to try and collect from you. A lot of times those companies, if you contact them and say you owe a certain amount of money and say, hey, can we work out a payment plan? Or can we dispute this? Say you owe $500. What if I pay you $200 now? Can we call it good? And a lot of those companies will do that because they're not making money on that money owed, but so they want something now. But that's something we'd work with. So after a while, it'll show that the collection is paid. And it'll increase your score. Anytime there's a collection on your score, that's going to have a negative impact on you. As long as you get it paid, it's not going to, if you pay it off less than what you owe, like if we settled with that company, it's not going to negatively impact your score. It'll build it up because you're paying your debts owed. Yeah. Yeah.
Can you talk a little bit about the financial education with students locally?
Yeah.
How does that happen?
So the high school branch that I work at in Alpena High School, what I do is I go into classrooms and do presentations like this. I am really trying to educate students on the importance of credit and establishing it at a young age. What we do is we have a couple different programs that we do. We have just presentations like this that I do. We also have we call it our financial reality fair, which is a really cool program. We've actually been doing this for about 5 years throughout Northeast Michigan. And we work with students and they pick a career that they're thinking about pursuing after high school. And then based on that career, we provide them 1 month of take-home pay with taxes and 401k and insurance and all those things taken out. And then they get their take-home pay, which is what would be deposited into their account. And they have to visit 12 different lifestyle stations. So they visit clothing, housing, food, transportation, leisure, charity, and all the different lifestyle stations that you need to survive for a month. And they have to budget that month's take-home pay. And the goal is to have money left over. So that's a program that we're teaching students about to create a budget. And then we follow up with that. If you were to get a credit card, how that would impact some of your purchasing power within this program. But mainly I am just there talking to students about credit and I share with them personal experiences I've had. I didn't start establishing credit until I was in my 20s and just how it would have been easier if I had started when I was 18. And we don't go out and tell people you have to get a credit card, but we just talk to them a little bit about how if they started at a young age and say they want to purchase a house in the next 5 years, if they start establishing credit now, they can slowly build up and get that good score. So we just try and educate them. We also, on our social media channels, we put out a lot of financial education Every Wednesday we do financial terms that we send out and different articles I'll share on there. We just try and get every avenue that we can to educate our community and our students. Like I talked about, we have a student-run branch here in Alpena. We also have one in Oscoda and in Alcona community schools. So we've been trying to educate youth for many years.
So how many of the students in each location take advantage of that?
Of the student branch or the financial education classes? So I just work with teachers at the school. And this past year, I was in, I think I did 20 to 25 different presentations. So each class has about 30 students roughly. So a couple hundred students were impacted and learned. I know that after those presentations, I had multiple students that come and visit me frequently, and I've helped them figure out how to save money. And they'll ask me, like, if I do this, if I put this much each week into this account, how long will it take me to save up for this and things like that. I've kind of become like a little coach for them, and I'm very happy to do so. It makes me excited to see kids understand and save money, because it's a big thing. And we're finding a lot of people, not just younger people, but we're finding a lot of the older generation don't have a savings built up, and then they're needing to borrow money in their 80s and 70s and 80s. And it's not as easy for them. So we figured if we can kind of educate our youth now, it'll have a trickle effect into the future and help them have strong financial futures.
I guess one of my concerns was whether or not the majority of students get the opportunity to utilize your information, or if it's, just as them at one point deciding they need to learn about it. It's not part of a curriculum setup.
Well, this is an exciting thing that was actually Governor Whitner just passed House Bill 5190, and it is requiring a personal finance class credit for each student to graduate with, starting with the freshman of 2024. So the freshmen of 2024 and beyond will be required to take a half a credit of personal finance, where they will learn about these type of things. They do offer that class right now at the high school as an elective, but it will be required now, which I'm really excited about working with the teachers on that to helping get this. But it's actually been really exciting to see how many students on their own come and want to learn about financial education. Our student branch in the high school, we built into the library there, and we're open during lunch hours, kind of as passing, so students can come and stop and withdraw money or deposit money as need be. But a lot of them have come on their own, which is really cool to see, because a lot of time we just think, oh, kids don't care, they'll worry about it later on in life. And it's nice to see kids wanting to understand this and seeing that they're hungry to learn about their finances so they don't make mistakes, because a lot of them have shared, I've seen how my parents struggle and I don't want to struggle like that. And it's great. I try and get into more classrooms every year. This was our first year being open at the high school. So going into year 2, I have big plans of meeting with more students and sharing this financial education with them, and just being a tool for them as they get older. Yes.
In your opinion, what is a good credit score, an average credit score? Or what is the average credit score?
That's a great question. So right now, the best credit score out there, if perfect credit score, is an 850. We kind of have a breakdown of what a poor credit score is. That's in the 350 to 550 range. You're probably not going to get approved for much. We're going to want to sit down and talk to you about what we can do to help you build your credit and get you on the path to a strong financial future. 550 to 650 range is fair. You might be approved for some type of loan, but you're going to have a really high interest rate. And we don't want to make you have a high interest rate, but we also understand that sometimes you need money, and we want to be that financial partner to help you. So we're also still going to counsel you. And a great program that we have is we have the ability to, if you have a not so great score and we can see that you're making improvements, we might be able to help you in the future refinance that loan and get a lower score. So we can save you money in the future once we see that you're establishing a good pattern. A good score is 650 to 699. We see you as a good borrower. You might not require collateral for your loan, which the other two scores, if we approved you, we'd have to have some type of collateral to collect on. We might ask additional questions about your credit history just to make sure that we're going to borrow to you properly. Your odds of getting approved are pretty good. And then that 700 to 750, you're more than likely approved. Might not be the best rate, but it's going to be like, we have an A, B, C. It might be the B range rate. You're still going to get a good rate on it, or maybe like an A minus rate on it. But we're going to qualify. You're qualified. You won't have any problems getting applied. And then that 750 to 850 is that excellent credit where we'd like to see and try and get all of our members too, but we definitely are in the market to help people. And that's the credit union philosophy, is people helping people. And that's what we're here to do, is to help educate them on their credit and work with them to have good credit.
Do you know if most financial institutions have financial advisors like yourself?
So this program, our financial wellness program, I know that we have it. A few of the other credit unions in town, I believe, have this program. It's something that more credit unions are doing. I can say we have over 100 employees throughout our 7 office locations, and roughly 38 of our employees throughout those are financial wellness coaches. So I would think in the area we have the most able to help. And this is a program, like I said, it's free. And you can schedule a meeting. Say you don't want to meet with anyone in Alpena, you want to meet with someone in Osneek or Tawas or Atlanta or Lincoln. We have a variety of employees that can assist you wherever you need to be. We can do them via Zoom. We don't like to do a lot of email, or at least I don't like to do just emailing back and forth. I like to have that actual conversation, but there's a lot of options out there how we can help you. And it's not just for people who are in not so great credit situations. We've helped people who have large sums of money and they just want to figure out the best way to make money or make sure they're on track with their savings goals. So it's not just a program that's for people who are struggling. It's for all members of all ages. Sometimes people just like to get that reassurance that they're on the right track for their credit and for their savings goals.
How soon will the state expect all schools to provide that financial education?
So freshman class of 2024, they will all be required. So I know that gives them a year and a half to get the instructors and the curriculum and everything all set. And I'm sure they'll have help from the state, but I am excited to work personally with the high school here and the principal to see what I can do to help, since I'm in the school every single day for the credit union. Maybe help develop some type of educational tools or curriculum or things that we find at the credit union would be beneficial for youth to know as they head out into the world. Yeah, it was, I want to say like a month ago it passed. So I got the notification. I did like a little happy dance in my office because I'm really a big nerd about financial education. So it was really exciting. Yes.
What is the time period?
Well, there's not really a set timeline. It kind of all depends on your ability. If you have large amounts of debt, to pay those down, if you can make larger payments. We do see that in a year's time, members can go from maybe the fair to the good range. It takes time. I always like to associate credit like weight loss. It's super easy to gain weight, but to lose it, it's really hard to do at times. So it is a little bit harder to bring your score up. So it does take a little bit longer time than it does to essentially destroy or to hurt it. I would say within a year, you can make good impact as long as you're following. If we created a path for you to follow, as long as you follow that, in a year, that would be a good amount of time to, it would show us too, if you are looking to get some type of loan, it shows that you are dedicated. If you're following your savings plan and paying on your bills, we don't look at just score and credit when we are defactoring. We look at your ability. Like if you were to come in and say, I know I'm in trouble and I need some help, and in a year I want to purchase a new vehicle, but I know I can't at this time. We'll look at those things and we'd be more likely to lend to you if we know we have that relationship and that you're working through to a program, because we see that dedication from you in the process. So we take into account more things than just your credit. We work really hard for our members, and we like to do what's best for them. And sometimes that does mean denying them. If they come in and they want a loan we know they can't afford, we're not going to approve it just for our bottom line. We're going to kind of tell you like, hey, that $100,000 loan we can't approve you for, but we could do a $50,000 loan because that's affordable to you. We don't want to put people in positions where they can't afford their bills, which is another thing that we look at with our credit. Yeah. Any other questions? Yeah, thank you. I appreciate it. I love talking about this kind of stuff, and I appreciate all the questions, and thank you for your time. Thanks.